The rules of double entry accounting are going to underpin everything we do for the rest of the year. So what are they? Well, it's this. They underpin the balance sheet and the accounting equation. So two topics we've done. And what it is there's two rules, and they say this. Every single transaction that we have will affect at least two items. It just says at least. So it's got to be two. Could be could be more, could be three, could be four, and we'll do some where there's five. 2 to 5 items in the accounting equation of the balance sheet. And the second rule is the accounting equation or the balance sheet must always balance after every one of these transactions. So what we're going to do, we kind of already know this already. And we know this because we've done the balance sheet and we've done this, the accounting equation. And we've set the accounting equation is assets equals liabilities plus owner's equity. Well, that's actually a little bit incomplete because what we haven't been doing is factoring in revenues and expenses. When we did the elements of accounting, we said there's 5. There's assets, liabilities, owner's equity. We can see those 3 there. But there's also revenues and expenses. So what we're going to do is just look at, well, where do revenues and expenses fit into this? And we'll say if we've got a revenue, well, a revenue increases owner's equity. Its literal definition it has to increase owner's equity. So what we'll say is, well, if we do have a revenue, it will go in this accounting equation. It will just sort of go under the owner's equity section and it will make it go up. And likewise, the definition of an expense, it literally had the words in it, it will decrease owner's equity. So what we'll say is that will go in the accounting equation as well, and it will go under owner's equity and it will make it go down. So now we have everything. So really, the accounting equation is now assets equals liabilities plus owner's equity, and then sort of a little subclause. We'll say within owner's equity, revenues will make it go up and expenses will make it go down. So to demonstrate this, let's just do some transactions and we'll see double entry, the rules of double entry accounting. The owner of a business on August the 1st deposited $35,000 into a bank account for the business to commence operations. We know at least 2 things have to happen here. And the first one is the business now has an asset called cash, and that has gone up $35,000. Now, the other thing that happens here is that's the owner giving the business capital. Capital goes up. Capital increases owner's equity, so that has also gone up 35,000. We balance it out. We've got assets at 35,000 equals liabilities of 0 plus owner's equity at 35,000. Beautiful, that balances. And what we do now is we turn that into a balance sheet. Now, just for the sake of this demonstration, to keep it simple, we're not going to classify this. We should when we do a proper balance sheet, but just for these purposes, we don't really need that. So I'm just going to put cash in here as an asset, capital in here under owner's equity, total them up, and that's beautiful, it balances. Our rules of double entry accounting are fulfilled. Let's go to August the 2nd. The business bought office furniture for $1,800 cash. Well, let's look at our accounting equation. The rules of double entry accounting say at least 2 things, one of which is cash goes down, but I've got another asset called office furniture going up. So to balance this out, assets went up and down by the same amount, that's 0, equals liabilities of 0 and owner's equity of 0, that balances. But the rules of double entry say, well, the balance sheet now has to balance after this transaction. Here's the balance sheet the day before. We've got to change that. So the first thing we're going to do is get rid of this cash. That cash is too high. It's got to have $1,800 come out of it. So it should be $33,200. Now, the other thing that happened was we said another asset needs to go up called office furniture. So that'll go there. And that's everything that happened. So we can just total that up. Put capital in as it was, didn't change. Total, and we all balance. Next one is purchased inventory for the business for $10,000 cash. Okay, well, first thing that happens is rules of double entry. One thing happens, cash goes down, but the second thing that happens is inventory goes up. So balance that out again. 0 for assets equals 0 for liabilities plus 0 for owner's equity. That's good. The accounting equation balances. We've now got a turn. This is the balance sheet from the day before on the 2nd of August. Something's happened on the 3rd. The rules of double entry say this has got to balance now after we put this in. So let's update it here for the 3rd of August. So what we'll start with is this cash figure. It was that, but we just said it's got to go down 10,000. So that'll be 23,200. Okay, nothing happened to the office furniture. That's going to go in as it was. But now we've got another asset called inventory of 10,000. Nothing happened to liabilities, and there was none there the day before. Capital stayed the same. So now if we balance this out, we total up all the assets, we get 35,000. We total up the equity side, and we get 35,000. Double entry rules are fulfilled. Let's go to the 4th. Purchase more inventory, but this time it's on credit for $5,000. Let's look at our accounting equation. What's happened here? Well, we've got an asset called inventory. It's gone up 5,000, but we haven't paid money, so cash isn't going to be affected at all. What is going to happen is we're going to have a liability called accounts payable go up by 5,000. And now we can balance this out. Assets have gone up 5,000. Liabilities have gone up 5,000. And nothing's happened to owner's equity. Well, 5,000 plus 0 equals 5,000. So that balances. Got to update this balance sheet though. This is the one from the day before. Rules of double entry say not only does this have to balance for this transaction, but the balance sheet's got to balance after the transaction as well. So let's update this to the 4th of August. Let's start with the cash. It was 23,200. Nothing happened, so we'll put it in as it was. Office furniture was 1,800. Nothing happened with that. Put that in. This is the first one that's going to change. It says inventory was 10,000. I bought another 5, so that should be 15,000. Now we can move over here. Liabilities, there were none the day before, but we said there's one called accounts payable going up, so that should go in there like this. Capital, nothing happened, so that's going to stay as it was at 35,000. Total it up, we've got assets of 23,200 plus 1,800 plus 15,000. That's a total of 40. Total up the liabilities and the owner's equity, we also get 40. Rules of double entry accounting are fulfilled. August the 5th, the owner took out $1,000 for personal use as drawings. Well, from the business's perspective, it's lost money. So in this case, the asset called cash goes down. And we know the drawings decrease the owner's capital or owner's equity. So it's going to go over here. Does this balance? Assets gone down 1,000 equals liabilities of 0 plus owner's equity going down 1,000. That balances. Let's update this balance sheet though so we can fulfill our double entry rules. Here it was on the 4th. Let's update it now after this on the 5th. Let's start with the cash. I had 23,200, but I've got to take out $1,000 for cash, so that should be 22,200. Nothing happened with furniture. Nothing happened with inventory. Nothing happened with accounts payable. But this does change. Capital should go from 35,000. It's going to go down 1,000. So that should be 34,000. Let's total both sides up, and they both come to 39,000. Rules of double entry accounting are fulfilled. August the 6th, I paid accounts payable $2,000 off the firm's account. I owe these people money. I paid some of it back. So, accounting equation, the first part of double entry accounting. At least two things happen here. So, we've got cash going down. We spent some money. But what we get for it is this liability called accounts payable goes down too. And that's it. So we've got assets going down 2,000 equals liabilities going down 2,000 plus nothing on owner's equity. This side of the accounting equation equals this side. Let's update it from the balance sheet from the day before. Here's the 5th of August, and then this happened on the 6th. Let's change this cash figure. That's what we did have. We had 22,200. Take out 2,000, so that should be 20,200. Nothing happens to furniture. Nothing happens to inventory. But this is different. It was $5,000 for accounts payable, but we paid them back too. So that should go down 2,000. So that should be 3,000. Nothing happened to capital here, so I'll leave that the same. Now if we total these two sides up, we get on the asset side 37,000, and on the equity side, we also get 37,000. Let's just do two more, just to be thorough. We don't really need to know these at this point in the course. The transactions here for August 7th and August 8th. This is just a bit of background for later on in the year. But why don't we say we provided services to a client and received $4,800 cash. Well, let's have a look at this. At least two things have to happen according to double entry accounting rules. First one is I've got cash, which is an asset of $4,800. Okay, now when we provide a service, that is a revenue. We learned at the start of this video that revenues increase owner's equity. So what that will do will actually increase the capital figure by 4,800. The definition of a revenue is it has to increase owner's equity, and that's what's happened. Let's balance this out. Assets gone up 4,800. That equals liabilities of 0 plus owner's equity of 4,800. So that balances. Let's update our balance sheet. That's what it was on August the 6th. Here's what happened on the 7th. Let's update it. So cash was 20,200. That should go up 4,800. And now that equals 25,000. Nothing happened to furniture. Nothing happened to inventory. Nothing happened to accounts payable. Stayed the same. It's this figure here. It was for capital 34,000. Let's increase it 4,800. So now it's 38,800. Okay, total it up. The assets come to 41,800. And if we total the equity side of the balance sheet, we get the same. Final example is an expense. Now, like I said just a second ago, we don't need to worry about this just yet. We're just being thorough. But yeah, let's say we paid $3,000 for this month's rent on August 8. That is an expense. Accounting equation wise, what happens? Well, I've got less money, so cash will go down 3,000. And an expense, literally the definition says it's got to decrease owner's equity. So that would go here. The rent expense would decrease your owner's equity or capital by 3,000. Let's balance this out accounting equation wise. Assets have gone down 3,000 equals liabilities are 0 plus owner's equity, which has gone down 3,000. This side of the accounting equation equals that side, but our final part of double entry accounting says so does the balance sheet. We've got to balance overall as well. And here's what it was on the 7th of August. We're going to update it for the 8th. So the first thing we'll do is say the cash was 25,000 the day before. That should go down 3,000, so that should be 22,000. Nothing's going to happen to furniture. Nothing's going to happen to inventory. Nothing's going to happen to accounts payable. That's just this capital figure. So it was 38,800. That will go down by 3,000, so that should be 35,800. So if we total these two sides up, total up these assets, we're going to get 38,800. And if we total up the liability side, we're going to get 38,300. So a lot of content in this video, but just remember the rules of double entry just say at least two things must happen for every transaction. And the accounting equation and the balance sheet must always balance after those transactions. And all it is just a matter of taking each transaction one at a time and plunking it within the accounting equation here, and then updating a balance sheet so it balances after it as well.